You know that feeling, right? That little jolt when a brown envelope from HMRC lands on your doormat. Your heart sinks a bit. You open it up, and there it is, a letter telling you you've underpaid your tax. Suddenly, a million questions pop into your head. How? Why? And most importantly, who's actually at fault here? Is it you? Your employer? HMRC themselves? Well, today, we're going to get right to the bottom of it, in this discussion put together by the experts at ProTax Account.
Okay, so let's dive straight in. We're in really good hands here, as this entire guide has been developed by the specialists at ProTax Accountant. These are the folks who untangle these exact kinds of tax knots for people day in, day out. So let's get some much-needed clarity. So let's just picture the scene. That official-looking envelope is sitting right there in your hand. You're being told you owe money, but the numbers and codes on the page might as well be in a different language. The most important thing is not to panic, and definitely don't just ignore it. Knowing what to do next is all about understanding your rights and responsibilities, and that is exactly what we're going to break down today.
All right, here's our game plan. First up, we'll tackle that dreaded letter itself. Then, we'll get into exactly why these tax codes go wrong so often. After that, we'll dig into the big question, who's really responsible? Then, we'll cover your absolute right to challenge a decision, and finally, we'll talk about how you can take back control of your tax situation for good.
Right then, let's start with that moment of impact. The letter arrives, and it's usually a very specific form from HMRC that tells you something's not quite right with your tax. Let's get to know it a bit better.
The key document you're most likely staring at is called a P800 tax calculation. Now, this isn't some random bill. Think of it as HMRC's end-of-year report card on your PAYE record. They crunch all the numbers they have about your income and the tax you've paid. If their total doesn't match what you actually paid, boom, they send you a P800. Sometimes this means a refund, which is fantastic news, but very often it's the one that says you owe them money.
And here's a perfect real-world example of just how easily this can happen. Say you're a freelance designer in London, juggling a couple of part-time gigs. It's a super common situation. The problem is, each client's payroll might think it's your only job and give you the full tax-free personal allowance of £12,570. But here's the kicker. You only get one personal allowance to cover all your income. So you've accidentally been given twice the tax-free pay you're entitled to. HMRC system eventually catches up after the tax year ends, and that's when the P800 lands on your doormat.
So this leads us to the big question, doesn't it? How does this even happen? Why do these tax codes, which are meant to keep everything accurate, cause so many headaches? Let's take a look at the usual suspects.
First off, a super quick refresher on the tax code itself. It's basically just a set of instructions for your employer. For the 2025/26 tax year, if you have one simple job, you'll probably be on code 1257L. All that means is your employer knows you can earn £12,570 before you start paying tax. But of course, life is rarely that simple, and when things in your life change, your tax code needs to change right along with it.
And here we have the big reasons things get messy. Changing jobs is a classic one. Info from your old job might not get to HMRC fast enough for them to tell your new employer the right code. Having more than one job, like our designer, is another huge trigger. And then you've got company benefits, things like a company car or private medical insurance. These are taxable, you see, so your tax code needs to be adjusted to collect the tax. If HMRC doesn't know about them, you're not paying enough. It's as simple as that.
Now, this is a point that trips up so many people, so let's clear it up. A P45 is what you get when you leave a job. A P60 is your end-of-year summary from your current employer. Both of those come from your boss. The P800, though, is different. It comes directly from HMRC, and it's their final verdict on your entire tax year, looking at all your income sources. It's the big picture review.
Okay, let's get to the main event. Who is actually responsible when it all goes wrong? It can feel like a big game of finger-pointing, so let's break down exactly who is supposed to do what in this little tax triangle. This is where the real confusion lies for most people.
First up, HMRC. Their job is to calculate and issue your tax code. They have enormous computer systems that do this using all the data they receive. But, and it's a big but, their calculation is only as good as the information they're fed. If you don't tell them about a new side hustle or your employer is late reporting a new company benefit, then their calculation is going to be wrong from the start.
So what about your employer? Well, their role is actually very simple, legally speaking. They have to use the exact tax code that HMRC sends to them. They can't just make one up or guess what it should be. Their job is to follow instructions and report your pay and tax accurately through the system. That's it.
And now we come to the most crucial point of all.
stay with me here because this might surprise you. While HMRC issues the code and your employer applies it, the law is absolutely crystal clear. The ultimate legal responsibility for paying the right amount of tax rests with you, the taxpayer. Now, I know that can feel unfair, but look at it this way. It actually empowers you. It means you have every right and every reason to check your code and shout up if it doesn't look right.
Now for a very important pro tip, because a big change is just around the corner. From April 2026, it's going to be mandatory for all employers to tax benefits in kind. We're talking company cars, health insurance, that sort of thing, directly through the payroll each month. This is a huge shift. It means many tax codes are going to change because those benefits will no longer be estimated in the code. It's more vital than ever that you get into the habit of checking your payslips and your tax code.
So, you've got the P800, you understand the responsibility triangle, but you're looking at the numbers and thinking, nope, this is just wrong. Well, the good news is you absolutely do not have to just roll over and pay it. Let's walk through your plan of action.
And this isn't just about having a bit of a grumble, it's your actual legal right, and it's been enshrined in UK law for over 50 years. The Taxes Management Act of 1970 gives you the foundation to appeal. This means if you genuinely believe HMRC has made a mistake, the law is on your side to challenge them.
But, and I can't say this loudly enough, you have to act fast. You have a strict 30-day window from the date printed on that notice to formally start your appeal. If you miss that deadline, you could lose your right to challenge it entirely. So please, don't just shove that envelope in a drawer to deal with later. The clock starts ticking the moment it's issued.
So how do you actually do it? Well, there's a clear, proven path. Step 1 is simply to contact them. A phone call can often sort out simple mistakes right there and then. If that doesn't fix it, you escalate to what's called a formal statutory review. This is where a different impartial officer at HMRC looks at the whole case from scratch. And if you're still not happy with the outcome, you can take your case to the first-tier tax tribunal, which is a totally independent body that acts like a court for tax disputes.
Okay, we have covered a lot of ground here, from understanding that initial shock to knowing exactly how to fight your corner. Let's bring it all together now and look at the key things you need to remember to really take control of your tax.
So, let's recap the essentials. First, that P800 is a calculation, not a demand set in stone. It can be questioned. Second, and this is the big one, the final legal responsibility is yours, which gives you the power to get involved. Third, that means you should always check your tax code, especially when your life changes. Fourth, you have a 30-day legal window to appeal. Don't miss it. And finally, the main takeaway here is that being proactive is always better than getting the reactive shock of a big, unexpected tax bill.
Now, before we finish, I have to share this important disclaimer. The information we've discussed today is for general guidance only, based on the rules as we understand them in January 2026. It's not a substitute for professional advice tailored to your specific situation. Tax is complicated, so you really must consult an expert before making any financial decisions.
So after hearing all of that, are you still feeling a bit overwhelmed or maybe just unsure about where you stand with your own taxes? You know what? That is completely understandable. This stuff can be incredibly complex, but the good news is you don't have to figure it all out on your own. If you'd like expert help to check your tax code, challenge an HMRC decision, or just get peace of mind, the team at Pro Tax Accountant are ready to help. You can reach them directly on WhatsApp or by phone at 07985 689912, or you can send them an email at info@protaxaccountant.co.uk. And for more clear, helpful advice just like this, make sure you subscribe to their YouTube channel. Thanks so much for joining me.